Sellers slashing listing prices in these 10 cities. Imagine this, you're at a grand opening sale where you expect a modest discount, but instead, you find prices slashed dramatically up to 50% off on items you've been eyeing for months. In the past few months, an unexpected and significant trend has swept through the U.S. housing market. Sellers in certain cities are sharply reducing their listing prices, a move that's catching the eyes of many potential homebuyers and changing the dynamics of the market. This trend is particularly pronounced in Texas and Florida, states that have traditionally boasted some of the nation's most bustling real estate markets. But what's behind these dramatic price cuts? And more importantly, which cities are experiencing the largest decreases? Today, we'll explore the underlying causes of these reductions, identify the top cities where prices are being slashed, and discuss the implications for people looking to buy homes. Whether you're an investor seeking opportunities or a first-time home buyer hoping to score a deal on your dream house, understanding these shifts is crucial. The current market conditions suggest that buyers have an unprecedented advantage, a stark contrast to the seller's market we've witnessed in previous years. According to recent data from Redfin, cities in Florida and Texas are seeing some of the highest percentages of listing price reductions in the nation. The shift comes as a relief to many prospective buyers who were previously priced out of these hot markets. For instance, in March 2024, several metropolitan areas in these states reported the softest median sale price growth, indicating a significant cooling down from the previously overheated market conditions. This trend is not isolated. It reflects a broader national shift influenced by various economic pressures, including rising mortgage rates and a general economic slowdown. These factors compel sellers to lower their expectations and their prices. Moreover, with the influx of new housing developments, especially in Texas and Florida, the competition among sellers is becoming fiercer, pushing them to make more substantial concessions to attract buyers. The current state of the housing market. The American housing market has been a roller coaster, and recently it's been all about the downhill ride. For the first time in years, house prices across the nation are not just stabilizing, they're dropping. According to a recent Bloomberg report, several large U.S. cities have seen home prices fall by up to 10% compared to last year. This trend marks a significant shift from the rapid price increases witnessed during the pandemic-driven boom. In cities like Miami, Florida, and Austin, Texas, the price reductions are even more pronounced. Data from the Wall Street Journal indicates that Miami has seen a 12% drop in median home prices in the last quarter alone, while Austin isn't far behind with an 11% decrease. These aren't isolated cases. Major markets across the country are feeling the pressure. According to Redfin, more than 20 major U.S. cities have reported at least a 5% drop in home prices this year, signaling a widespread trend that's giving buyers the upper hand. The backdrop of these price adjustments is a complex mix of economic factors, chief among them being the rising mortgage rates. The Federal Reserve's decision to hike interest rates has seen mortgage rates climb to their highest in nearly 2 decades, with the national average now hovering around 7%. This increase has significantly cooled buyer enthusiasm, as higher borrowing costs mean higher monthly payments. Furthermore, economic uncertainties, including fears of a recession, have led many potential buyers to adopt a wait-and-see approach, further dampening the demand and putting additional pressure on prices. Together, these elements paint a picture of a housing market that's undergoing a significant correction, driven by external economic pressures and a shift in buyer sentiment. This adjustment phase is reshaping the landscape, offering opportunities for buyers who were previously sidelined by skyrocketing prices and intense competition. Please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. Spotlight on Texas and Florida. In Texas, the phrase, "everything is bigger," usually applies, but recently it's the price cuts in the housing market that are catching everyone's attention. Cities like Austin and Dallas have seen some of the most significant price reductions in the country. For instance, the Wall Street Journal reports that Austin experienced an 11% drop in median home prices recently, one of the steepest declines noted among major U.S. cities. Similarly, Dallas wasn't far behind, with a 9% reduction as per data from Bloomberg. This downturn is surprising for a state that has seen explosive growth over the last decade. Florida's housing market tells a similar story. Renowned for its sunny beaches and as a retiree paradise, the state is now gaining attention for its falling house prices. According to a report by Redfin, Miami saw a dramatic 12% decrease in home prices, making it one of the most notable examples of the current trend. Places like Tampa and Orlando also reported significant price cuts, with drops around 10% as highlighted in recent market analyses. These reductions reflect a broader trend affecting not only the luxury sectors but also more affordable market segments. Several factors are driving these market adjustments in Texas and Florida. Both states have experienced a surge in new housing development spurred by population growth and migration trends, especially as people moved from more expensive states during the pandemic looking for lower taxes and more space. Bloomberg highlights that this influx has led to an oversupply in some areas, contributing to price reductions. Moreover, the favorable tax laws in these states continue to attract businesses and individuals, although the resulting increase in housing supply is now outpacing demand, leading to price cuts. This detailed look at Texas and Florida provides a clearer understanding of why these traditionally hot markets are cooling off. The dynamics of supply and demand are shifting, influenced by economic policies, demographic changes, and broader national economic trends. For potential home buyers, these shifts could represent a window of opportunity to enter these markets at a more affordable price point than has been available in recent years. Reasons behind the price cuts. In recent times, the story of American real estate has taken a dramatic turn. Too many houses, not enough buyers. This surplus in housing inventory has become particularly visible in states like Texas and Florida, which are seeing some of the steepest price drops. According to data from Bloomberg, new housing developments have surged by 30% in these regions, leading to an unprecedented increase in available homes. This glut of properties on the market means sellers are slashing prices to attract buyers, fundamentally shifting the market dynamics from a seller's to a buyer's market. The consequences of this surplus are wide-ranging. For instance, in Houston, Texas, where inventory has increased by 25% year over year, the median home price has dropped by approximately 8%, as per reports from the Wall Street Journal. This trend is mirrored in other cities with high inventory levels, where the competition among sellers intensifies, leading to further price reductions. Home builders have played a crucial role in the current market dynamics. In an effort to capitalize on the migration trends during and after the pandemic, builders increased their outputs, especially in Texas and Florida. However, as the market cooled and buyer demand decreased, these builders found themselves with excess stock. To compete, builders began offering concessions like covering closing costs or including high-end finishes without additional charges, which in turn forced traditional home sellers to lower their prices to remain competitive. For example, Redfin highlights that in Dallas, builders are offering discounts of up to $50,000 on new homes to entice buyers. This aggressive strategy has not only affected other new builds, but also impacted the resale market, where sellers are compelled to make similar or even more significant price adjustments. Real estate experts are closely watching these shifts. Eric Auciello, a Redfin sales manager in Florida, noted in a recent interview with the Wall Street Journal that the current market is one of the best times for buyers in recent history. He mentioned the power dynamics in the real estate market have shifted dramatically. Buyers now have the upper hand, and they're in a position to negotiate deals that would have been unthinkable just a couple of years ago. Experts agree that the market adjustment is likely to continue in the near term. They cite continued economic uncertainty and the potential for further increases in interest rates as additional factors that could keep the market conditions favorable for buyers. Furthermore, demographic trends such as aging baby boomers, downsizing, and millennials entering the market with different housing needs continue to influence the types and locations of homes that are in demand. This analysis indicates a significant transformation in the U.S. housing market, driven by both economic factors and changes in consumer behavior. As these trends continue, they will shape the future of real estate, potentially offering more opportunities for buyers and challenges for sellers. Economic and social implications. The sharp drop in home prices is not just a boon for buyers, it's reshaping local economies across the United States. In cities where real estate constitutes a significant portion of economic activity, these price adjustments are having a profound effect. According to a report by Bloomberg, in cities like Orlando and Tampa, the real estate market contributes to nearly 20% of the local GDP. With median home prices in these areas falling by around 10% this year, the ripple effects are substantial. Local governments are seeing reductions in property tax revenues, which in turn affects funding for public services such as education, transportation, and public safety. Moreover, lower home prices can lead to decreased consumer spending. Homeowners, seeing their home values drop, feel less wealthy and are more cautious about spending money. This phenomenon, often referred to as the wealth effect, can lead to reduced sales in local businesses, impacting everything from retail to services industries. The changes in the housing market are also influencing social structures and community dynamics. For instance, the Wall Street Journal notes that more affordable housing prices are attracting diverse demographic groups to cities that were previously considered too expensive. Young families and retirees are increasingly moving to places like San Antonio and Jacksonville, drawn by the more affordable cost of living and the quality of life these cities offer. This influx of new residents can lead to vibrant, revitalized communities, but it also presents challenges such as increased demand for local services and infrastructure. Additionally, long-standing residents may face displacement or cultural shifts that alter the community fabric. Local governments and community organizations are thus tasked with balancing growth and maintaining the character and livability of their neighborhoods. Looking ahead, experts are cautiously optimistic about the future of the housing market. Analysts from the Wall Street Journal predict that while some stabilization is expected as the economy recovers from the shocks of the past few years, home prices in high-demand areas like Florida and Texas are unlikely to return to their peak levels anytime soon. Factors such as continued interest rate volatility and geopolitical uncertainties could keep the market in flux. However, demographic trends such as the aging baby boomer population and the rise of remote work are likely to sustain demand in markets that offer affordable housing and a high quality of life. Cities that can adapt to these changes by providing diverse housing options and robust local amenities might not only recover but thrive in the coming years. The current downturn in home prices is a complex phenomenon with wide-reaching economic and social implications. While it presents challenges to local economies and communities, it also offers opportunities for demographic renewal and market stabilization. As we move forward, understanding these dynamics will be crucial for policymakers, businesses, and residents alike. Buyer's perspective. In a surprising turn of events, what was once a seller's market has dramatically shifted to favor buyers. Cities across the U.S., especially in Texas and Florida, are witnessing a significant drop in home prices, offering potential buyers unprecedented advantages. According to a recent Bloomberg report, median home prices in these states have decreased by up to 12% this year alone. This reduction in price means the buyers can now access homes that were previously out of their budget, increasing affordability and opening up a broader range of options. For buyers looking to capitalize on the current market conditions, there are several strategies to consider. First, leveraging the increased competition among sellers is crucial. As reported by the Wall Street Journal, buyers are now in a strong position to negotiate better terms, request concessions, and even ask sellers to cover closing costs. Another effective strategy is to monitor new listings closely. Homes that have been on the market for several weeks may offer better negotiation leverage, allowing buyers to secure even lower prices. Additionally, working with a knowledgeable real estate agent who understands local market trends can provide buyers with insider insights and access to deals that might not be widely advertised. Agents can also help navigate the complexities of purchasing a home, from initial offers to closing deals, ensuring that buyers maximize their advantages during negotiations. The benefits of the current market are not just theoretical. Many buyers have successfully negotiated this buyer-friendly market to find their dream homes at surprisingly affordable prices. Another testimonial from a buyer in Tampa, Florida reveals how they managed to negotiate an additional $15,000 off the listing price due to the home sitting on the market longer than usual. These stories are becoming more common as the market continues to adjust, providing real-life examples of how the shift towards a buyer's market is reshaping the real estate landscape and offering new opportunities for those looking to purchase homes. With prices dropping and sellers more open to negotiations, now is an opportune time for potential home buyers to explore the market. Those who approach the buying process with solid strategies and informed perspectives are finding themselves in a strong position to secure great deals, turning the dream of home ownership into an attainable reality. If you've been waiting for the right time to explore real estate opportunities, there's no better moment than now. With lower prices and more negotiating power, buyers have a unique advantage in today's market. Consider looking into the housing markets of Texas and Florida. Your dream home might be waiting there at a price you never thought possible. As we look towards the future, one question remains: how will these market adjustments influence the broader American dream of home ownership? Whether this trend will spread or stabilize remains to be seen, but for now, the opportunities are ripe for the taking. Thanks for watching, and please make sure you subscribe if you enjoyed the video and watch this one as well.